Good afternoon. This is Clark Neighbors with the market recap for the week ending March 15, 2018. Kind of a rough week in the last couple weeks, especially in the grain markets, and I'll get to that in a second. But beans down over that time frame roughly $1.50 since late May. And corn's down roughly 50 cents over that same time frame. Wheat also seeing tremendous pressure. And two factors in regards to that. One being the tariff concerns or the trade concerns, and secondly, U.S. Crop conditions, weather, etc. off to a pretty good start as we approach the middle of June. In a little more detail on the trade issues, they seem to become a little more clear today, or in some cases more murky, and that uncertainty is what the market doesn't like. The clearness is the U.S. put 25% tariffs on this morning on a lot of technology type products, and this afternoon after the close, China retaliated with 25% tariffs on U.S. autos, ag products, seafood, etc. So there was some retaliation. The key going forward is the administration has mentioned they may retaliate again based on what China did this afternoon. So we'll see. I mean, play over the weekend will be interesting. Now, most of the sources look like these tariffs would take place, if I'm understanding this right, on the July the 6th, and there will be talks between now and then. So stay tuned. This is kind of an unprecedented situation, and the uncertainty in the market makes people a little nervous, thus pressure in the trade. So the number one thing is uncertainty. Now, keep in mind, China is our biggest partner in soybean products, soybeans especially. We have also seen the dollar see a bunch of strength over the last few weeks. We've also seen some of these other commodities break, energies, cotton. So it's kind of a roundabout way. You can sit here and look at the tariffs and so on, but there's also some factors with the dollar breaking and where the investment dollars are going. Now, Commitment Traders Report came out this afternoon, and factoring in what the market's done the last few days, it's conceivable that the corn position is neutral by the funds or maybe short, and beans you would almost assume they're short at this point. Now, again, back to the tariffs for a second. Keep in mind, this is a tariff. It is not an embargo. There's a huge difference. And secondly, this does not change the world soybean or / protein demand. It does have impacts on where it comes from, logistics, and it also has cheapened up these beans for the U.S. or excuse me, for the foreign buyer going forward. So kind of some subtle things to keep in the back of your mind. Bean spreads have widened substantially during this break. We've went from an inverted soybean market to one with a lot of carry in about 2 to 3 weeks. Those spreads have exploded, especially in the new crop. It's one thing the market's kind of saying. There might be some demand down the road. We are actually seeing better basis levels in some sectors in that winter time frame, December, January, especially in the export market. Better basis levels of beans right now for that time frame delivery than we did a year ago at that time. Secondly, the macro, as I mentioned, the Fed changed interest rates this week, went up a quarter of a tick, a little more hawkish. That's what's helped the dollar jump a little bit. Stock market continues to be firm. It has seen some pressure here the last couple days, but it's almost like the investment world's going a little different direction, at least short term right now in these markets. Longer term, I mean, you talk about the soybeans, that thing's all up in the air because of the impact of the sanctions and tariffs. Obviously, weather could have some impact. I think keep in mind, longer term we like is the corn. Got good corn demand, good exports right now. The carryout is of such where something shy of 1.6 is an adequate carryout, but if you have any kind of impact on yield at some point going forward, that can tighten that carryout up quite a bit, and that would have some impact obviously on price going forward. So a good rule of thumb is if we have 180 bushel corn, well above the record, well above trend line, you probably bump that carryout up to give or take 2 billion bushels, about where we were a year ago. But same point, if you bring that yield down to 170, which is about 4 bushels below trend line, then you're looking at a carryout of maybe 1.2, 1.3. So that's when it tightens up quite a bit. So I think in the big picture, that's something to keep in mind is the corn market has a better story to tell than the beans. Keep in mind, at the end of the month, we get a stocks report, and we also get a planting update, so that can be interesting. So again, a lot of moving parts in this market, namely by the tariff or the trade situation, and obviously weather this time of year can have an impact. So if you want to discuss this any further with us at the office, feel free to call us. Phone number is 800-373-2525 or BIScommodities.com. With that, everyone have a wonderful weekend.